I think the bottom has been in, we said it, 17.5, 17.6, whatever that number was, that wick. That was the bottom for this cycle.
Hello and welcome. This is the Daily Crypto. We have the CEO of Morgan Creek Capital Management, Mark Yusko, here with us today to talk about why he thinks Bitcoin is the future. As you saw in the first clip, he thinks we have set the bottom. He provides great reasoning, so make sure to watch till the end to not miss out.
Lot to unpack in there. So first, look, I think Powell is dovish at heart. And he knows he's going to have to ease aggressively at the end of this year into next year. So he's just been, reloading the gun by raising rates off emergency levels. The thing about the Fed funds rate, no one cares about the Fed funds rate. No one borrows it. Do you borrow at Fed funds? I don't borrow at Fed funds. Nobody borrows at Fed funds. Banks borrow at Fed funds, and they buy treasuries in a riskless transaction that makes them a lot of money. That's who borrows at Fed funds. So keeping that at zero was basically just a way to reliquify the banks after the global financial crisis. So now what we're stuck with is this question of inflation and recession and, we had 2 negative GDP prints, but that's not a recession. Well, it is a recession. We're in a recession. And yes, the NBER never calls a recession until after the fact, usually 8 to 9 months after the fact. But all of that goes to this simple point. Without liquidity, capital market assets are completely mispriced and completely misaligned. And that means more destruction of the dollar, because this nonsense about inflation, it's not inflation, right? Inflation is caused by excess demand or limited supply of a good or service. That is not what happened. What happened is massive money printing.
Ever since the pandemic in 2020, the Fed has printed trillions of dollars, which is now in circulation in the economy. Inflation isn't what's killing the economy. In fact, it's the trillions that were printed. That is the real driving force that might result in a recession.
And the reason I'm wildly bullish on Bitcoin and crypto broadly is mostly for the tech, but also for the simple identity. 1 Bitcoin equals 1 Bitcoin. But we don't price in Bitcoin. We price in currencies. Dollars, yen, euro. Like, most people have no idea. There's never been a bear market in Bitcoin in bolivars or in pesos or in Turkish lira. Never been a bear market. There's only bear market in dollars, yen, euro, etc. when the Fed changes their liquidity profile and the price goes down because leveraged speculators have to sell their assets. But here's the interesting thing. Over the last 2 years, Tim, the government created, the Fed, not the government, the Fed, because the Fed's not government. The Fed is funny.
Right.
It's not federal, and there are no reserves. Like, why is it called the Federal Reserve?
Now, this is a very interesting point that Mark makes. He says that Bitcoin has never been in a bear market if we compare it to weaker currencies like the Turkish lira and pesos. We are seeing a bear market because we are still trading cryptocurrencies in terms of dollar value. Had it been the opposite, the speculators would have been long gone, which is a good thing for the entire crypto space.
The reality is they printed half of all the dollars in the history of the Republic over the past 2 years. Okay?
Yeah.
So they cut the value in half. So 1 divided by a half is 2. Bitcoin prices doubled over the last 2 years, almost precisely. And people are like, oh, it's not a good hedge for inflation. It's actually a perfect store of value, which is what we're talking about. It's actually been way better than gold, and gold prices would be higher, but they're being spoofed by the banks. They're being manipulated. And the real problem we have right now is, and again, this is not what you want to necessarily talk about, but the real problem we have is we're in the then they fight you phase. So from 2009 to 15 was the first they ignore you phase. A bunch of nerds and geeks playing with that magic internet money. Who gives a crap? All right. Then from 2016 to 21 was then they laugh at you phase. God, look at those nerds and geeks. They're so stupid playing with their magic internet money. Okay. Now, 2022 to 2027 is then they fight you phase. It's like, oh shit, this is real. We're going to fight. They're going to fight with regulation. They're going to fight with threats. They're going to fight with bullying. They're going to fight with the banks and devaluation. And the fighting part is real, but the cool part is we've already won.
Historically, whenever Bitcoin halving takes place, prices tend to be much higher than the previous cycle. Yet, people say it isn't a hedge for inflation. Mark says they are wrong because if we ignore the ups and downs, prices have always kept on pushing to the upside.
Right now, the new higher low is 21 something, 21.2, 21.3.
Right.
If we were to violate that, then you have to reevaluate the patterns. But there's nothing. I mean, this is one of the stronger chart patterns I've seen in a long time. I mean, we just busted through the 50-day moving average. 20-day moving average is turning up and is probably going to signal a rage and buy here. As long as we keep making higher highs and higher lows, then we're in accumulation phase. I think the bottom has been in, we set it 17.5, 17.6, whatever that number was, that wick. That was the bottom for this cycle.
With the new higher low of Bitcoin at 21,000, Mark believes that the bottom was at 19,000, and it's very likely that we won't see that price ever again. Do you think 19K was the bottom? Or are we still seeing one final leg down? Let us know in the comments.
And whoever thought of this is like a gigabrain. So I don't really believe Satoshi could be one person, because this is just such genius. It's hard for me to believe it could be a single person, but maybe. But the idea that the moment anyone spent the money to do a 51% attack, the value of BTC would go to zero and you'd lost all the money you spent to try to hack 9,000 nodes over a 10-minute period. Probably cost you hundreds of millions of dollars to get a quantum.
Right.
So it will never happen. So it's just genius. It's just beautiful. It's elegant. And the same thing is true with the halving. The halving is a built-in number go up. And the reason that's important is if you want new technology to get adopted, it has to move. And this is a sexist thing, I'm not supposed to say it, but it's like guys, right? We don't see things if it ain't moving. We're hunter-gatherers from our ancestors. Like my wife says, get the ketchup. I open the fridge, no ketchup. I close the door, she comes up, she grabs the ketchup. It ain't moving, I can't see it. Literally, I can't see it. So the reality is, if the price doesn't move, right? If the price of Bitcoin stayed 10 cents, no one would care. But the halving, what it does is it says, well, wait a second. If the number of block rewards going to the miners gets cut in half, but my electricity prices are the same, my rent is the same, I'm out of business unless the price goes up. So the price has to go up.
51% attack is a type of hack that can be used to exploit Bitcoin. However, it requires the attacker to obtain 51% of the total computing power, which is impossible on its own. Even if someone did manage to do it, as soon as they start the attack, Bitcoin's price will go to zero, and they will end up losing the hundreds of millions of dollars that they spent for the attack. Support us by liking this video and subscribing to our channel. Sharing this video with your friends because it's always nice to help someone out. See you guys in the next one.